Hello, viewers. My name is Sunday, and you are welcome to Against FX. If you are new to my channel, please do subscribe to it, all right? Because all these materials that we do release, they are for free and they don't come cheap. Okay, please, if you are getting value from all these materials, please do subscribe. It won't cost you anything to subscribe to it. It's just a matter of you, all right, helping us to grow the channel, all right, so that even YouTube can see that people are watching uh, our materials. So that is how it works, all right. And we do offer forex trading mentorship. So you can head to our website againstfx.com. From there, you can reach out, or you can reach out on our Telegram. Then we can teach you from the scratch. Even if you don't know anything about forex trading, we teach you from the scratch to a point where you will now be independent of yourself, meaning that you can now trade on your own. All right. So we offer mentorship, and it's just a token. All right, it's not expensive. As a matter of fact, how much can you pay for knowledge? All right, so forex trading is for everybody. Be you old, young, even if you are a pensioner, it's even the best time for you to just sit, relax at home. Then, in the comfort of your home, all you need is just your PC, like maybe your laptop or your computer, anyone. You just use it and be making your money. That's all. And one thing you have in mind is that forex trading requires little capital. With a little capital, you have what we call leverage. Leverage will enable you take position of a very large instrument that you are trading. So all those things we are going to teach you when you reach out to us. So today, I want to talk about uh, how you can avoid going against trend because it's dangerous. One thing you shouldn't do as a trader is for you not to ever go against trend. Don't you ever go against the trend. It's dangerous. Don't go against the trend. It's dangerous. All right. And how will you be able to know or identify the direction of trend? That is why we emphasize during our mentorship. The first thing you need to learn is for you to know the direction of trend. Is it heading south or is it heading north? If it is bullish, once a bullish trend is a trend that it will be going up, all right? A candle will print like this, then another candle will come print, all right? Another candle will come again. When this one finish, it will come print, all right? So as you see it, is going up, all right? Another candle will still come and print at the top. All right, so you see, like this, we say is bullish. This is a bullish trend. Once you see a candle open from the down and close from the top. Or now, when you another one is once you see a candle open from the top, is coming down, it will close. Then another one will come open. All right, guys, another will come open, close. Then another one again, open, close. Another one open from the top, come down, close from the bottom. Another one will come open from the top, close from the bottom. close at the bottom rather. All right. So this is what you should know. Once you see something like this, you know that it's a what? It's a downtrend. It's a downtrend. You know that it's a downtrend. So the trend is coming down. But once you see something like this, once you see something like this, a candlestick open from the bottom, close at the top, open from the bottom, close at the top, like that. Once you see it pushing up to the upside, it will open down, close at the top, open from just the bottom, close at the top, like this. Once it's going up, we say the trend is bullish. This is a bullish trend, guys. And for you to know, you see this point here, this blue candle, you see it opens from here, it closes here. Another one open from here, it closes here. Another one open from here, you see, but price pushed to the down again, but it rejected. Then it now went up again up to this point. It pushed, came down again. This is the battle between the bear and the bull. All right, the buyers and the seller. All right, they now close here. It opened here. Sellers push the price downward again. Then buyers, they are still in the market. What they did was to return the price. They push the price upward. At the end of the day, it got to this point. So once you see price opening, closing at the top, it open from the down, it closed at the top. You know that it's a bullish trend. These ones you see white candle in between this. All right, this one, these are the things you are going to learn. Now, at this point, because there was a resistance here, that was why you see reaction here. There's a resistance, so when price got here, it has to react to it. If you look at the left, you see there's another resistance here. So anytime price gets to any resistance, price will always respect it and react. As a matter of fact, some people, some traders, this is where they take their profit. All right. Most traders take their profit once they enter from a support, then they know, okay, the next resistance level is a turning point for price, because at that point there are still orders that are there. People have sellers, they have locked in orders there. So anything can happen if the sellers that are there waiting for price to get there, all right, waiting for price to rise. Once it get there, then if the sellers that are there, if they are more than the buyers that are pushing the price up, then it will reverse. You see, some took their profit, others were here, the others were activated, and price pushed to the downside a little. Then the next bar market, because buyers are more than the seller, they continue to push the price to the upside. At the end of the day, price got here. We can see right now, me, I'm on this trade. I'm on this trade right now. You can see price is coming down. It's coming down. It's coming down, right? It's coming down. It's just pushing down. All right? It's pushing down. So at this point, you don't need to be buying when the price is pushing down, because price has rallied up to this point. All right? It has rallied up to this point. And if you look left, you discover that there's a resistance here. There's a resistance here. What happened? When price pushed to the upside, it got here, a sell triggered and it came down. Why did that sell trigger? Look at your left again. If you look at it, you discover that there is a resistance here. So there's a resistance here, one point. Price got here, pushed to the upside, it got here, it went down. All right. Now, when it got here, it changed character, market shift. It pushed again to this same level, that is supply level. Then it dish out a sell again. All right. Now again, price push to this same level, to this same level, price push to this same level. And what happened as a trader, what you should be expecting, you should expect the same reaction until price keep coming there to retest, keep coming there to retest. Maybe one day price will now break through it. And once price break through this resistance, because it's an obvious resistance, why? Because price has tested this place more than twice, and what happened? Sellers push the price down, and now this is the third time. So if he dish now he's dishing out a sell, is the current market now is selling. Maybe in future, if price now turn again and come to this level, if he manage to break it, because the resistance will not hold forever. It will surely break. Once it breaks it, then you wait for a test. Price will come back to retest it, then it will now start pushing up. So that is why we say there's a strategy called break and retest. People trade only that. Once they see a breakout, they wait for retest. Retest meaning that price will come back to that same level to retest that level before it resume the underlying trend. So once they see a breakout, is what is a strategy for them. That is an opportunity for them to take position. All these things, all these strategies, we know them. We will teach you. But at the end of the day, you will now be the one to now refine all the strategies and now pick one, because you can't be trading everything. But that does not mean that if price breaks out, you cannot take position. Once you open your chart and you see that there's a breakout, and you know that once price breaks out, it will come back and retest. So if you retest, you take position and you buy or sell. All right? It's that does not mean that you are deviating from your own strategy. Now, what the major thing here, the point here is that don't ever go against the trend, the direction of the trend. Is very, very dangerous, because if you do, number one, you are just endangering your capital, and before you know it, you blow your account. And one thing guys should know is that don't always rush to get involved in the market, because there's what we call FOMO, fear of missing out. Even if you miss out on a trade, there are thousands of opportunity that that present itself on a daily basis based on your strategy. If you miss out on one opportunity, tomorrow another opportunity will show up. So don't just jump. Get your fact right. Get your technical analysis very, very right. First, you know the direction of the trend. Know where the trend is going. How do you ascertain where trend is going? The first thing you should know, to ascertain the direction of trend, you go to higher time frame. All right, higher time frame will show you the picture, the whole picture. That if you go to daily time frame, you will see that price action is going up, because it got to this point, is rejecting from this resistance level. As simple as that. Once you are able to identify that the overall direction of trend is bullish, now that you have identified that, the next thing you need to do is for you to now know, okay, the current trend from the overall trend, what is happening. Then you scale down. Like me, I take my entry from 4 hours. When I scale down to 4 hours, I now see that, okay, because this point here, this level, is a potential supply zone, a resistance level. All right. Now, price is pushing to the downside. If you scale down further, all right, if you scale down further, let's go to 15 minutes. Let me just quickly show you guys something. If you go to 15 minutes, You read structure, all those things. That does not mean you should not scale down to see what is happening. You see, price got here. What happened? He got here, he now came back, created a low here. Price created a low. All you need to do, what happened here? This is what? This is market shift. It has already given us market shift. From 15-minute market shift has already occurred. Now price came down. Now when price got here, what we pushed to the upside. All right? Because if you come here now, you bring your fib, you measure it to this point, what happened? Price created a high, pushed down, it created a low, all right? Then push to the upside 79.0 because the price needs to push into the premium level, all right? Now that it has pushed into the premium level, if it breaks it now, meaning that the current trend will continue. But he rejected from this level. Now he now came down and broke this and violated this low, meaning that here we now experience what we call market shift, or some people will call it change of character. All right, market shift or change of character. Now you now see what happened. Price is now breaking uh, structure to the downside. So the things you need to learn when you come to us is we'll show you how to perfectly read structure so that you won't have issue at all. You need to know how to read structure. Once you know how to read structure, I tell you, you won't have problem at all. The thing you just need to do is open your chart, know the direction of the trend, then from the direction of the overall trend, you now scale down for you to be able to ascertain the current trend. So you can look at it from here. You see the trend has been going up. All right. Now this point here now is the new trend. This area now is a new trend, and this is where your opportunity is for you to take position. This is the opportunity that is available to you. Leave this trend here, this overall trend, but this current trend as an intraday trader, this is the opportunity. And once there is a change of character, and a break of structure followed, meaning that a new trend has been established. But if there is no change of character, just forget it. Just stick to just stick to that underlying trend. You know that the trend is still bullish. But once it gives you a market shift, I'm telling you, there will be if the previous trend was maybe bullish, and you now see price giving you a market shift, that means that trend will change, is now become bearish. It's as simple as that. Trading is difficult, but if you see somebody, a mentor that will show you how it is done, it becomes very, very simple and easy for new traders. But some of us learn it in a very hard and difficult way. We took our time before we were able to find our feet. It takes a very long time with suffering and cracking of brain trying to figure it out. All right, it's not easy to be a forex trader, but once you are able to find your feet, I tell you, the rest is history. All right, once you're able to find your feet, the only thing you now need is capital. Because in any business you venture into that you are doing, what distinguishes you from just ordinary some maybe from others is your capital. Because where somebody is making, for example, maybe you have small capital, or let's just use for example a petty trader with somebody who trade in volume. They are not the same thing, even though they are doing the same business. So thank you so much, and subscribe to my channel, share this Leave a comment. Thank you.